Welcome back. The company on our radar today is Route Mobile. The company's top line has seen a growth of close to about 0.9% on a quarter-on-quarter basis, and on a year-on-year basis, the revenue growth was 9.7%. Margins came in at 12.1%, and profits have crossed that 100 crore mark. The company has retained its FY25 top-line growth guidance of 18 to 22%, with margins of 13%. Gautam Badalia, Group Chief Strategy Officer and the Chief Investor Relationships Officer at Route Mobile, is now with us on the show. Gautam, hi, thank you for joining in. This is Reema here. So first, to get to your guidance of 18 to 22% for the full year, you will need to do about an 8-9% growth in Q3 and Q4 on a quarter-on-quarter basis. Now, that appears to be on the higher side compared to the recent run rate. How will you achieve it?
Thank you, Reema, for having me here, and good morning, everyone. So, from the last quarter standpoint, I think it panned out to be a good quarter for Route Mobile. But for about 7 days, I think where we had a platform glitch, which was really outside of our control, the platform really panned out well. I think we have kind of been getting now in the momentum of large deal wins. I mean, we won a large e-commerce deal. And that is, again, I mean, across 10 plus countries, largely in the European market. So, and there is some seasonality into the business. I mean, H1 usually pans out to be 47% of revenue. And H2 is where, because of the festivities, pans out to be a very, very strong kind of second half. And basis the run rate, I mean, for the early 20 days, I mean, the first 20 days of the month, I think we are very, very confident. We are reasonably confident that we should be able to kind of deliver the growth that I think we've already committed to in terms of the guidance.
So can you tell us the growth that you've seen in the first 20 days of October?
So on a YOY basis, I think we're looking at 15-20% growth already, I think, in terms of the run rate.
In the first 20 days of October, right? You've seen
That's
a 15
correct.
to 20% growth.
That's correct.
Okay. So, you spoke about how some days were impacted in the quarter gone by, and that impacted revenues. Is that the same reason why margins have been lowered? In the first half, 12.4% is the margin. Your guidance is 13%. Will you be able to achieve that? What would be the key drivers there?
So the good thing is, I mean, the business today, I mean, works on a very fixed, I mean, a large part of the OPEX cost is fixed in nature. So if you are able to drive revenues and drive margins, I mean, there is a natural kind of an operating leverage that plays out. So if we are talking about the kind of growth for H2, I mean, if you are able to kind of deliver that, which we are reasonably confident of delivering, it should percolate, I mean, to kind of the expansion of margins. So from 12.2 to 13%, which we have guided, I mean, we should largely be able to deliver that. Historically, we have delivered a 13.5% kind of a EBITDA margin for H2, so for at least Q3 historically. So I think we are fairly confident we'll be able to kind of deliver the revenue and the margin guidance. And the other parameter was largely the cash flow conversion. I think we have done fairly well there. I think we've been able to reduce the receivable days and also kind of, I mean, about 78% was the EBITDA to cash flow conversion.
I remember in the past you'd spoken about weakness in the international business. What is happening on that front?
So typically July, August, I mean, they are holiday seasons, I mean, internationally for a lot of markets. Despite that, I think the rest of the world business, I mean, for us, they've grown in terms of volumes. A little bit of impact, I think, is largely there in the MR messaging, which is our wholly owned subsidiary, largely catering to continental Europe because of geopolitical issues. I think they have kind of been grappling with a little bit of a headwind there. I mean, but for that, I think the rest of the world, I think we have done well. And some of the large contracts that we have won, and one of the large RFP that we have, it's a global RFP again. I mean, it's a mega RFP from our perspective. If we are able to get a meaningful bite into that RFP, I mean, that will augur really well, I mean, from a FY26 growth standpoint.
The other segment which has done well for you so far has been the new product sales. But this time around, the growth has come at 32%. Previously, you've seen growth of around 93%, it's been 75%. Do you think now growth levels will slow down in new product sales? And how much will it reach in terms of double-digit contribution to sales? By when, sorry.
So I think we've done fairly well. I mean, we've delivered our 32% YOY growth. The good thing is, I think the last quarter essentially was the building block. I mean, with the group, with the Proximus group, to kind of create the right sales motion to drive the cross selling of the new products. So, and we've already bid for a few large deals globally with the large marquee enterprises. Hopefully, I mean, if some of those were to fructify during the course of this quarter, I mean, that will really kind of give additional leg to the new products momentum.
Can you give us some more color on these large deals that are in the pipeline that you've bid for the new product segment?
I mean, so some of these are large global companies where, I mean, they were looking at, I mean, products like email solutions. So we bid for a very large RFP on our email portfolio. I can't actually call out.
So what's the size of these large deals? What's the size of these large deals that you bid for? And when are you likely to hear?
It's premature to call it out right now. I mean, let's first, I mean, once we have it in the bag, we'll definitely come and kind of call it out.
But if they do fructify, do you think your growth can get back to 50% plus? Just trying to understand the significance and the way forward. And when are you likely to hear back?
So as we said, I think on the new product side, I think on a quarter-on-quarter basis, we have been kind of, I mean, the revenue contribution of new products has been increasing. And I think the endeavor today, I mean, it is at about a 7% contribution to the overall revenue. And the endeavor is to kind of double that over the next 2-3 years. So some of these deals that we are talking about, I mean, these are large deals. And thanks to, I mean, the global reach, I mean, that we have today, I mean, we are now able to participate in a lot of these deals. So, but for that, I mean, because of confidentiality and stuff, I mean, we'll not be able to call out any numbers right now. But whenever it fructifies, we'll be happy to kind of come in and kind of give you a perspective.
You want to double it to 15% in 2 or 3 years or longer?
Yeah, between 2 to 3 years, I think we should look at doubling it.
Okay. Gautam, a note by HDFC Security, it assumes that there'll be 18% YOY growth for FY25, which is within your guided range as well. They say it'll be 8.5% growth from the Vodafone Idea deal and 9% growth from the base business. Is it fair to assume that the base business will see a single-digit growth this time, or you'll be able to do it in double digits?
No, so I mean, strictly speaking, I mean, just wanted to kind of also clear this perspective. So Vodafone Idea actually is the supplier, right? I mean, so we are driving the growth from customers. So technically speaking, I mean, the entire growth that we're talking about is organic growth coming from large customers, where we have the benefit because of the supplier arrangement that we have with Vodafone Idea.
Okay. So we can't bifurcate it in terms of how much from the Vodafone Idea incremental deal versus the base business. Is that what you're saying?
Yeah, so I mean, the business is actually driven, I mean, from growth coming from existing and new customers. But we have a commitment with Vodafone Idea in terms of the volumes that we are going to mobilize for them. I mean, so we are fairly, so we have done fairly well. I mean, in terms of H1, H2, considering the seasonality, we should be able to kind of fulfill that obligation for this year with Vodafone Idea.
Okay.
Gautam?
Okay, all right. Gautam, thank you so much for joining in today with those thoughts and the outlook going forward. That's the word coming in from Route Mobile. They stick to their guidance of 18 to 22% revenue growth with margins of around 13% in FY25. We'll slip into a short break. When we come back, we'll discuss market technicals with Mitesh Thakkar and also discuss the top trading bets.